Hey everybody, Brett Swarts here, Capital Gains Tax Solutions. I'm here with Roman McCovey. I think I pronounced it correctly. He's out of San Diego. He's a real estate agent. He's a realtor. He's a friend of mine. I'm mentoring him, and he is looking at implementing the Deferred Sales Trust for the first time, perhaps in his career, to help people who are looking to sell highly appreciated properties in San Diego. Roman, how you doing?
Doing good, Brett. How you doing?
I'm doing fantastic. How is San Diego these days? Is it still the best weather in the world?
It is still the best weather in the world. You can't beat it, and so it's amazing over here. When are you going to move here?
Good question. So, I'll be down there tomorrow for a couple days, but besides that, we're going to be in Coronado Island. But maybe one day we'll be there. But it's still California. It's high taxes, man. The taxes are still high down there, right? Like they're up here in Northern California.
Sure are, absolutely.
Which leads us to our discussion today. We're going to talk about all things deferring capital gains tax on the sale of highly appreciated assets, including your house in La Jolla and perhaps in other parts of the coastal parts of California, the Bay Area, all of the above. But we're focusing like a laser here. Is Roman is the boots on the ground. He actually works with one of, if not the top real estate team in all of San Diego, and together they can help you exit at a high price. But like any good sale, you also need a tax flow plan, and so that's where we're going to be running through some scenarios here. So, Roma, what would you say the biggest frustration is for someone who lives in La Jolla and is looking to sell, their property? And it's, like for example, let's find out some of these homes that are priced at, a minimum of like 5 million, and let's not have any max. But let's start with number one, 6625 Mary Lunge Drive, La Jolla, 8,000 square feet. What do you think the biggest frustration is if they purchase this home for a very low price? What do you think it is?
Well, they're not going to be happy giving up 20 to 30, 35% in capital gains tax. So they're looking for ways to, get rid of that. They need to somehow sell and keep all of their proceeds. So yeah, that's they're going to be their biggest frustration. If they can't defer the tax, then might as well stay.
Yeah, because it's not what you own. It's not what you sell it for. It's what you net, right? Which includes,
Right.
you got to pay listing agent to sell. You got to pay,
Mhm.
you got to pay, buy side potentially as well for a
Right.
buyer who's coming in. You've got closing costs. You got transfer tax. You got escrow, and then on top of that, capital gains tax. And in fact, it's very high. It's as high as 20% federal and then 13.3% for the state of California. So that's 33% if it's a primary home. Then you add another 3.8%, and that's Obamacare tax. Now you're at 37 or so if it's investment property, right? That's only for investment. But let's just
Mhm.
imagine this house here at 6625 Maryland Drive in La Jolla, California, 92037. It's selling for 6.9 million, at least what it's listed for, and it's 6 beds, 7 baths. Roman, first of all, I would live here. Would you live here?
Oh, absolutely. I mean, it's a great looking house.
It's a beautiful house. Um, so this is interesting. We're going to go to the property history here. Now, this one looks like it sold November 15th, 2021 for 6.1 million. So they've only owned it for less
Mhm.
than a year, okay? And they put it back in the market for $800,000 more. So in this scenario, their basis is 6.1, right? Because that's when the last buyer purchased it for. And if they lived here the last 5 years, they're looking at a 500, and they're married, a $500,000 not improvement, but increase of their basis is the best way to put it. Okay, so you
Mhm.
can add 500,000 here, and then they're at 6.6 million. Okay, 6.6 million, which means they're about after closing cost, let's say of 100, 200,000 of potential closing costs. There's really no gain here, right? So we can't help them. There's nothing for us to help them here. If we go back to if you go all the way back, let's see. I mean, this person who bought it for 750 probably bought the land for 750, probably built a million or two on top of it. We don't know what it is, but that would have been the person to help, right? So, but in 2000, let's see, 15 or uh, let's see here. This is interesting. I don't necessarily see It was listed, delisted, listed, price change, delisted, listed, pending, sold. So they sold it for 6.1. So the person who we could have helped was in November 15th of 2021. This person
Mm,
who sold it. Why? Because they probably had a $4 or $5 million gain. Does that make sense, Roman? Like
right.
we
Yep.
can't decipher all of those things, and we don't
Hmm.
know if it was a primary or not. But let's assume this was a primary, and they had a $5 million gain. Okay, and how do I get to 5 million? Well, I'm just going to estimate that after 750, it cost them, another million and a half to build this thing, whatever, right? 1.3 million to build this thing, and that's where we're going to get to. That 2 million is the basis, and then we're going to take the 6.1 as the sales price. So it'd be 6.1 minus the 2 million. So that's 4.1 million as the gain, and then we're going to take 33% of that, which is 1.35 million dollars. So
Wow.
had they not had the deferred sales trust, they paid $1.35 million unless they did a 1031 exchange, which if it only qualifies as if it's an investment property. So there's a lot of ifs then here, but these are the key things here. If you're considering selling a primary home, you want a solution called the deferred sales trust. So let's go on to the next one and let's see if Roman can do this one. And so Roman, what do we have here? Either Roman. He might be frozen. I'll keep
Uh,
talking.
we have
He is frozen, so I think I'm gonna wait till he's unfrozen. So we've got a 4 bed, 3.5 bath. This is literally right on the ocean. Beautiful, $14 million property in La Jolla. Okay, so let's go to the sales and tax history. I'm on Redfin for those that are
here.
listening to this, maybe on a podcast, and it's not actually showing. Are you back now, Roman? Okay, I think you're back now. I think you were kind
Hey,
of.
I think I'm back. Can you hear me?
Yeah, you're
Okay,
sounding
sorry
okay
about
now.
that. Okay, can you hear me?
Yeah. So we got a property on the beach for 14.6 million. We
Yep.
can't see the tax history or we can't see the sales history, so we don't know. To me, this makes me think that this person is the only owner, right? Like the
It's the
fact that
first
this
owner.
makes me think that. I don't know for sure. It could, but it's an older house,
Hmm.
right? You can tell. Looks like it was built maybe in the 70s. It looks like 1967, right? And it's listed by Wendy. Let's give Wendy a call right now. Wendy, we're gonna see how Wendy's doing here. 1-858-9. So we're gonna try to find out what's going on with this house. And the couple things we want to find out is it listed? Is it the original owner, right? And is it the primary or is it an investment property at this point? Of course, why are they selling? And see if we can help them out. So it's ringing right now. Okay. So not quite maybe going to answer this one, but we can do some math here. What do you think they're in it for, Roman?
Hi, this is Wendy. I can't get to the phone right now. Please.
So I think that let's just say, they maybe bought the property at 5 million and now they're selling at 14.6. So
Okay.
that's
Yeah.
about
Sounds good.
does that
So, hey,
seem
hey, Wendy,
about
this
right?
is Brett
Yeah.
Swarts. I'm just calling on your listing 7068 Neptune Plain in La Jolla. In fact, I work with the top real estate company down in San Diego. And the reason I'm calling is I'm doing a little case study on properties that are highly priced and have big capital gains tax. And I think yours might be a good kind of case study. Curious if your owner is a primary homeowner or if this is just a rental. And then if you've heard of something called a deferred sales trust, which is not a 1031 exchange, it can defer capital gains taxes. We just did it for a house, an $8.3 million deal in Palo Alto, a $7.9 million beach house in Santa Cruz. And just closed a $12.7 million deal in San Diego as well for a hotel seller. So I think it might be a good fit for this. If you're interested, please give me a call. No worries if you're not. I know this is totally a cold call, but I think it might be able to help your seller out for this $14.6 million deal. You can check us out by going to capitalgainstaxsolutions.com or searching YouTube as well. And happy to just kind of chat with you about this. All right. Thank you so much. I'm making reach at 916-886-2986, extension 1. Thank you, Wendy. Bye. All right. So yeah, let's just say they bought it for 1967 and they put a bunch of improvements into it. And it's just 5 million. 5 million is the rough number here. Okay.
Mhm.
I think that's actually a lot because if this is the original owner, I doubt it was that expensive, but it could be.
Oh,
Okay, but let's just use that as the number. So 14.6, okay, minus the 5 million, it's going to give a $9.6 million gain. Okay. So if this is
right.
not a rental, does not qualify for a 1031, 33% would be 3.16 million. Okay. So without the deferred sales trust, they're paying 3.16 million. With the deferred sales trust, they are paying they're being able to defer 3.168 million. Does that make sense, Roman?
Yeah, sure thing.
Do you see how you just added value instead of having to sell it for an extra 3.168 million? They're netting an extra 3.186 million. I think he's delayed again. I'm going to take that as a positive yes. Okay, and see if we can get his connection back.
Yeah.
Are you
Yeah,
back,
no,
Roman?
that's amazing.
Isn't that cool?
Hey, can you hear me?
Yeah, you're back now. Okay, so now this one
Okay.
you're going to do. Roman's going to do it all by himself. Okay, so I'm clicking on this one. So Roman, tell us about this property.
All right. Your screen is just lagging just a little bit.
Okay.
Okay, so we've got here property listed for 8.95, 2550 via Barletta in La Jolla. Beautiful property right here, and looks like it's 4 bed, 6.5 bath. Let's see, when was this property purchased? Can we take a look at that information?
Yeah, absolutely. So we're going to click on. What are we going to click on? Sales and
All
tax
right,
history, right?
sales and
Boom.
tax history right
That puts us
there.
all the way down. And look at that.
Wow, so 3.9, about 3.5 years ago, December 2018. And what was the listing price again? It was 8.9?
Yes, listed at
8.9.
8.9. Yep. Uh-huh.
Okay, so they have about, so 5 million, a little
Yep.
over $5 million in difference there.
Yep.
And so if they were to sell
And Roman's breaking up, so I'm going to jump
today,
back in here again. Yeah. Are you there?
Yep, can you hear me?
Yep. I think you're back now.
All right, awesome. So if they were to sell today, they would lose at most $1.8 million in capital gains if they did not defer their tax. So that's a hefty change right
Yep.
there.
And
that
by the
they
way,
get.
so we would take this this $5 million gain here, and we
Mhm.
would, if they're married, we would minus 500,000 from that
Right.
because so
Okay.
it'd be yep. If they were single, minus 250 if it's a primary. But yeah,
Mhm.
roughly they're looking at, let's say if it's a $5 million gain minus some closing costs, this and that. 500,000 is that, so it gives us a $4.5 million gain. 33% is about $1.485 million, which is substantial and is big. And let's find out if Melina is aware of this one. And Melina, okay. And
Hello?
hi, Melina.
Hi.
Melina, my name is Brett Swarts, and I'm a real estate professional. I'm just calling on the La Jolla listing you have on 2550 Via Barletta.
Yes?
Yes, and the reason for my call is I work with one of the top real estate brokerages in San Diego, and we help agents like yourself who have clients that are selling highly appreciated assets to be able to defer capital gains tax. And we just helped a client out of Palo Alto sell an $8.3 million house.
Well, the situation here, the seller already has a lawyer doing all this stuff for him. So, unfortunately, in this deal, I don't think we will need that, but maybe in the future, if you can send me an email to my email address, and I
Yeah.
will have you in my contact.
Absolutely, yeah. What's your email? And I'm happy to send you over our ebook to
You can
yeah.
check my name online, and my email is there. Right now,
Okay, I'll check your name online and I'll send it to you. Okay, Melina? Thank you so much.
you.
Okay, bye-bye.
Thank you. Bye.
All right, cool. So she says maybe the attorney's doing that. My guess would be she doesn't want to get involved because she thinks it's going to hurt the deal because she thinks it might stall the deal. I don't know. We could be wrong. Or they already have a solution for it. I don't know. I don't think she really knows because she didn't say they didn't have a solution. But either way, I'll send some information to Melina and see if Melina will like to help her client. You never know. So, all right, let's head over to the next one. Okay, let's see if you can do this one all by yourself. Well, this one's coming soon. Look at this. Okay. All right. So what do we have here, Roman?
All right, so we have a property listed for 32.5, so 32,500,000. La Jolla. Let's go to sales and tax history to see when it was last purchased. All right, so March 2016, it was sold for about 4.7 million. And so let's just assume that they're married. If they're single, we would have a $250,000 write-off there. So if they're married, it's 500,000. So let's bust out the calculator real quick. Okay, so 32,500. Minus, all right, let's take a look. All right, so that's about 1 point. Sorry, Brett, my calculator is freezing up here.
There's no problem. It's a $9 million tax liability, right? Which is crazy. Yep. Now, I'm guessing here that what's happening is this is probably a build to suit, right? So I doubt they actually purchased this property as is, right? It looks like it's probably a brand new property. Yeah, that they did a tear down and then they built, right? And so that being said, though, just because they bought it for 4.65, let's just assume a couple things. Let's just say it cost they bought it for 4.65. It cost another $5 million to build, so they're in it for $10 million. Even if it costs them $10 million to build, they're in it for $15 million. Like, you have so much gain here. So let's just say let's meet somewhere in the middle. 12.5 million is the basis. 32,500,000 is the price. So that's a $20 million gain. So if it's investment property, it's 37%, which is 7.4 million. If it's just primary home, which these type of numbers make me think that it's probably not a primary home, Roman, right? It's probably not. Just because it's so brand new, it's probably a developer, right? So in this scenario, 37% puts it at 7.4 million. That's probably what it is. So either way, you can still help the developer out because a lot of these developers, they want to go take the money and go develop another one, and they want to do that. They want to buy another property at 4.6, put 5 million into it, and sell it for 32.5 million, right? But here's the challenge with the 1031 exchange: is you know that in a 1031, if you sell it for 32.5 million, you need to buy equal or greater value. 32.5 million.
With the DST, you don't have to.
You don't have to do that. It doesn't have to be equal or greater value. It can be smaller little chunks, right? And so we just added $7.4 million to this person here, right? So let's give Deborah a call. See if Deborah knows. All right, so we're calling Deborah. And we're going to find out about Chelsea Street in La Jolla. $32 million house and potentially about a $10 to $12 million basis and about a $7 million tax liability.
Hi, this is Deborah Greenspan. I'm not able to come to the phone right now. Kindly leave your message and I'll call you back just as soon as I possibly can. Thank you.
Deborah, hey, this is Brett Swarts, Capital Gains Tax Solutions. I'm also a real estate professional. I actually work with the top group out of San Diego, and I'm just calling on the Chelsea Street in La Jolla. We just helped a client defer a bunch of capital gains tax on a luxury primary home out of Palo Alto and another one in Santa Cruz. And this looks like it could be a good fit for what we offer. It's called a Deferred Sales Trust. You may have not heard of it before. It's not a 1031 exchange, and it works for custom home builders. It works for developers. It works for investors. It also works for primary homeowners, where we can defer the capital gains tax. I'm not sure what their basis is on this one, but I thought I'd just run it by you to see if this is something you'd be interested in learning more about for your clients. But my estimate is about a $7.9 million liability, tax liability that this can defer, and then the funds can be reinvested into real estate, all tax deferred, build deals, and invest into stock market. Really a lot of flexibility. If you want to learn more, you go to capitalgainstaxsolutions.com, or you can just give me a call. I'm happy to tell you about it. And I appreciate you listening to this message, and hope to talk to you soon. 916-886-2986. Thanks. Bye. All right.
Hey, Brett, how did you come up with the 10 million cost basis?
I'm just doing some assumptions, right? Because like this, the odds of somebody buying this thing, at 4.65 on the beach and then just turning around and selling it for 32.5 million in just a couple years is next to zero, right? So I've seen enough of these, Roman, where you call the person, they're like, oh yeah, it was a teardown, or they just bought the lot and then they just completely put $10 million into it. So I'm just trying to be conservative and just say, because if you call somebody, be like, hey, I can save you this tax, they're like, dude, we put 10 million into it.
Sure.
Right. So you just might as well assume they put 5 or 10 or 7 million into it.
Gotcha.
And then say, hey, I know you probably put some money into it. I don't know exactly what it is, but let's make some assumptions, right? So it just shows that you're doing your homework, right?
Sure.
And you're being thoughtful, and you're not just, slapping it together. So that is this one. Let's go to the next one. This next one would be, let's see here. Let's see. This one looks kind of cool. Oh, this one looks like, by the way, the newer the property, it might not be as, a big of a gain. Like this one, this says new construction, because that means they might not have as much, so they're probably not as likely. But like this one, let's look at this one. This one's an 8.95. This one looks like it's probably built in the mid 80s. 2003. Okay, a little bit later, but this looks like a good one. So we've got about 9 million sales and tax history. Okay, here we go. Right, so 3.65. Right, so this is a good one.
Okay.
So what are we looking at here? What do you think the liability is? Take about 9 million minus about 3.5 million.
All right. So 6 million, say that they're married. So that gives you 5.5 million right there. And so 5.5, go ahead. Let's just assume it's the highest bracket. So 5. So they're looking at about 1.8 million in tax liability.
Yeah, here you go. 1.6 to 1.8, depending if it's a primary home or not. Right. And so that's substantial. And that could be the difference in selling the house versus not selling the house, right? Because maybe this thing's overpriced and maybe they need to net a certain number, but they can't net it because of the tax. But now they can net it because we can defer a lot of the tax. So let's give Eric a call and see what Eric has to say. All right. See if he answers. You never know. It could be a buyer ready to buy this thing.
Thank you for calling Erica Antonio and Associates at Pacific Sotheby's International Realty. We are so sorry we missed your phone call at this time. We are either on the other line or assisting clients. Your call is very important to us. Please enter your password.
Oh, we lost him. So we'll see if Eric calls us back. All right, let's go do one more here.
All right.
Well, this one looks kind of cool. How about this one? So it looks like it's probably older, right? And so what do we got here, Roman?
All right. So it is about 15 million. Let's go to sales and tax history
real quick. Fast too. Let's look at the age, right? So it's 2005, so it's a little bit older.
Okay.
but not too old. But that generally is erring in the right direction.
Mm-hmm.
In fact, look at this, right? So it looks like it's the original owner potentially. It sold for $800,000. So this is interesting. So what probably happened was they bought the land for $800,000 in 1984, right?
Okay.
So that's what you're seeing here. And then they went on and they built this beautiful property, right, in 2005, right on the beach, right?
Gotcha.
And they probably have lived in it, but I don't know. Let's just say this is 13,000 square feet. Let's say this cost them, even if you can do this other estimate too. You take 13,000 square, 13,305. Let's say it cost them even $350 a square foot. Okay, which could be a lot in 2005.
Yeah,
that puts us at 4.6 million, right?
Mm-hmm.
If it cost them $500 a square foot, that puts them at 6.6 million. So let's just call it 6 million to be safe is the basis. Okay. We don't know the marriage status one way or the other, but if they were, you could add a little bit more. So then we're going to take the 14.9. Let's just call it 15 million. Okay. Minus the 6 is 9 million. 33% is $2.97 million. $2.97 million. So now let's take this and give them a call. You hear it okay, Roman, in here?
Yeah, that's perfect.
Andrew, hey, this is Brett Swarts. I'm calling on the La Jolla Farms Road property you have listed for sale.
Yeah. How can I help you, Brett?
Yes, sir. So I work with, I don't know if you know Roman and Bobby Martins. They're a top real estate firm there in San Diego. And we just helped a client who exited a property in Palo Alto for $8.3 million, defer some capital gains tax, not using a 1031 exchange. We just did another $12 million deal in San Diego for a hotel seller. And it's kind of unique in that it works for primary homes. It works for investment properties. And we identified your property as a potential fit for your client. We estimated the basis. I don't know if they built it or how they got it, but substantial amount of tax deferral. And I just wanted to just send you a little video to show you what it is. It's pretty cool. It's been around for 25 years. I started at Marcus and Millichap and learned about it years ago, but most people just don't know about it. It's called a Deferred Sales Trust, and we're doing them all over the country. I'm here in Sacramento, spent some time in San Diego in college, and we're just trying to tell every luxury realtor about it so they can help their client.
Well, I'd be happy to take a look at it. It's not going to be applicable in this particular situation. My client's got financial advisors galore, as you can imagine, and they've already thought through all of this. If or when we get that buyer, we're in good shape in that regard. But go ahead and send me what you've got. Take a look at it.
Absolutely. And what's the best way to send it to you, Andrew? Can I find you on LinkedIn, or do you want me to shoot you an email, or what do you want me to do?
An email would be best.
Okay. What's your email?
Andrew at theandrewjohnson.agency.
Excellent. And are you mostly doing high-end kind of luxury like this?
When I can.
Yeah, I mean it's a good listing, right? I mean 14.9 million. I'm going like, oh my goodness. Yeah.
The marketing costs for something like this are pretty extreme, as you can imagine. But so is the commission if when I hit that buyer.
Yeah, no, I like it. I actually still list and sell deals myself too. I just listed an apartment complex up in Sacramento, 48 units for a client of mine that's going to be using a Deferred Sales Trust. And we just hired a group called 10X, and they do this like auction style for commercial properties, and it costs $2.25 on the buy side, and then I have the full commission. But it's an interesting like model. I don't know if you've ever looked at the auction, on luxury. I've never done it. I usually only just sell commercial properties, but it's fascinating to see, the cost to sell, and then of course the amount to net. And I know you said those financial advisors are really smart. You'd be surprised. I'm coming out with a book with the guy named Kevin Harrington from Shark Tank, Andrew, and he's going to be in my book. And he had never heard of this, and he's like blown away by it, right? And so I'm curious to see, and again, this one might be not the one, but for future deals, right? It's really remarkable what we can do with capital gains tax deferral, but it can help you get lower the price if it can't sell for 14.9, of course, right? Because it helps the seller to literally net millions of dollars in their pocket, right? That they wouldn't have had otherwise. And by the way, their financial advisors can manage the funds, and everyone works together, and it's a big win. But had you ever heard of that before, or is that the first time you've heard of this? I'm just curious. Has anyone ever approached you?
I have heard of it before. Yeah, I have heard of it, but like I said, I'd be more than happy to take a look at your video and get a little more information about what you guys are doing specifically. So
cool.
Yeah, send it on over and I'll have a look.
I will. And then can I follow up with you in a couple of weeks to see what you thought?
Sure.
Okay. Thanks, Andrew. Appreciate it.
Absolutely.
Okay. Take care.
Great.
Goodbye. Goodbye.
Bye.
That's good.
Yeah, so that's Mr. Andrew, and he was open to it. See, open, and available. And again, this is our estimate here on this one at 9675 La Jolla Farms Road. It's substantial, right? Again, I doubt they actually are in it for more than $5 million, right?
Mm-hmm.
And so if they sell it for 15, let's say it's $6 million. They're in it for $6 million with the construction cost, which I think would be really high. Then that's $9 million gain, and then they're at 33%. That's $2.97 million, right? Now on 37%, that's $3.3 million. Now you might say, well, Brett, they can just do a 1031, right? Well, they could. If it's an investment property, if it's a primary, they can't, right? But if it's investment, let's assume that they moved it out for 2 years, rented it out, and got that status. Mm-hmm. Here's the challenge: they would have to buy something of equal or greater value. So that's kind of wild, right? So $15 million is a lot of money, and maybe you're taking on some debt. I don't know how much they owe on this thing if they want to be taking on debt, overpaying for properties. And so this is where the deferred sales trust is a multi-facet solution, in that it not only defers the capital gains tax, but then it gives them diversification into equity, and they don't have to overpay for a property. And maybe they go buy another piece of land for $800,000 and go do it all over again, right? It gives you the Netflix way of exiting versus Blockbuster. Do you see that, Roman?
Right. Oh yeah. That's it gives you a lot more flexibility. You're not forced into doing, purchasing real estate if you don't absolutely need to.
What questions do you have, Roman? Anything come to mind, or the listener might have? What do you think?
What are are there situations where the DST just simply doesn't work? Obviously, if it's not net proceeds of more than 1 million, it usually is not helpful. But what are those situations where the DST is just not?
Yeah, so let's talk about this. So people might not have heard that yet. What is the minimums? And so when wouldn't you use the deferred sales trust? Well, the first one would be if it's not a big enough deal. So let's say it's a $1 million. If it's not a $1 million net proceeds, $1 million gain, then it's too small for us to help you. Why? Because our fees eat up the savings. So you got to hire these, smart tax attorneys, and us. My role as the trustee to help you do all this. And when we do that, we charge, right? So fees are about 1.5% on the gross sales price, just depending on the sale of the deal. Unless it's above that, then it's 1.25 on anything above that, generally speaking. And then the ongoing recurring fees with the financial advisor, somewhere around 1.5%, just give or take, depending on the size of the deal and where and how the funds are invested. So the numbers got to make sense. That's the first thing. The other thing is, let's say someone needs all that money to buy a primary home. They say, well, Roman, I'm selling for $15 million. But I want all of it or most of it to go buy a primary home. Well, if it's primary, that's taxable, right? But if you can put it in the trust and you don't need it for the primary, that's tax deferred. Okay, so what do you need? Do you need or want the money for personal use, or do you need or want the money just for business investment purposes? So if it's the latter, then use the deferred sales trust. If it's the former, then just go ahead and pay your tax, right? So the government gives us these incentives to do these things if it's not personal. Does that make sense?
That totally makes sense. Now, if you sell a house and you're deferring $3 million through the DST, could you take a chunk, say 500,000, and apply that towards, you're going to pay taxes on that because you want to put a down payment on a house. The rest of the 2.5, you can go ahead and still use the DST. Yeah,
exactly. You can take a big chunk out up front. You're like, hey, I know I need this for a down payment. Instead of taking $3 million all at closing, let's take 2.5. Let's take 500 into my personal account, pay tax on that. The other 2.5 goes into the trust, and I can do a little bit. They're totally flexible there.
Okay, that's great. Wow, that's amazing.
So Roman, if people want to get in touch with you, what's the best place for them to find you?
Yeah, give me a call. It's just 858-224-3245, or you can email me. It's roman@moveupsandiego.com.
Excellent. And Roman's specializing in real estate in all of San Diego, but
That's right.
especially luxury on the beaches, where as a team, we can help you decipher this. And I look at like this a Rubik's Cube, right? And your scenario is a little bit complex perhaps, but we're here to help you solve that. We're closing deals every single week. If you want to get in touch with me, you can go to capitalgainstaxsolutions.com. You can also check out our new book that's coming out. I mentioned on that phone call that Mr. Kevin Harrington from Shark Tank will be in the book. So he's in like I think he's chapter 1 or chapter 2, which is pretty sweet. And like, let me see if I can show this to you here. It's called Finding Your Mentor. And Kevin shares his whole story right there. Boom, right there, right? Pretty cool. And then we have all kinds of other smart people, but it's called Building a Tax Deferred Exit Strategy. And we believe it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. But the key is knowing what the Deferred Sales Trust is, what your options are, how it compares to the 1031 exchange, and see if it's a good fit. And you go to capitalgainstaxsolutions.com. We'd love to help you out. And then we have amazing strategic alliances and partners like Roman across the country to help you exit smart, exit at the highest price, best terms, and then use the Deferred Sales Trust to defer all that capital gains tax. Hey, so appreciate everyone watching out there, wherever you're watching this. Please rate, review, subscribe, and please share this with somebody that it could inspire and help today. We appreciate it. Bye.